Hello and welcome to this week's edition of the Clinton Howell Team's weekly market update, where we tell you what the Howell is going on. Today we're going to dig into what should we be expecting in our local real estate markets in the coming months for this fall, and also what should we be expecting from the Bank of Canada's upcoming decision date on September 17th. Well, first of all, let's dig into the Bank of Canada stuff. As of July 30th of 2025, the Bank of Canada had held the overnight rate at 2.75% for the third consecutive time. What is driving the Bank of Canada decision? So we're taking a look at the CPI, so the Consumer Price Index inflation. We're looking at the employment numbers. We're looking at the GDP. We're also looking at U.S. trade developments and the certainty of our economic situation. So there's a lot of factors at play. A lot of them are at odds with each other. So it's been difficult in recent months for Bank of Canada to continue the trend of lowering the rates because they're trying to stimulate the economy, trying to protect the economy from dropping. So in terms of inflation, we've got core inflation, which eliminates volatile components like food and energy. It's for July, 3.05%. So this is over the target. So even though the CPI, which is the Consumer Price Index, was at 1.7%, the economists are anticipating that it's likely the rates are going to hold where they are. So there was a poll done by Reuters in July of 2025 where they surveyed 28 economists. 18 were expecting a cut to 2.5%, but this has shifted with recent data. Updated forecasts from firms like TD Economics, Desjardins, and Scotiabank are now leaning toward a hold in September, with potential cuts later in the year. So as I read through all the data, it seems like the general consensus is there will be more cuts on the horizon, but not likely on September 17th. Now, in terms of the local real estate markets, we're seeing a shift right now. There's a transition right now in terms of the sales versus new listing ratios. The buyer confidence is up. So the things are aiming toward a seller's market. We're seeing balanced market conditions and some seller's market conditions in different neighborhoods right now. Based on our Escarpment Niagara Appointment Centre data, which tells us about the demand side of the business, historically, August appears to be a bellwether month, indicating a market transition. August of 2020 and 2025 share similar patterns of intense buyer activity. The first 3 weeks of 2025 are almost a carbon copy of 2020. So history is repeating itself, as our broker owner Conrad Zerini recently said in an update himself. Total is sitting around 5 to 10 sales of each other, so very close. In both years, sales outpaced listings, especially in August, which is extremely rare. 2020 followed a spring freeze, the COVID shutdown, followed by a massive summer bounce. 2025 may be echoing that pattern with a late start to the year, followed by a powerful August, which signals buyer confidence is back. So we are seeing a huge rise in buyer confidence, and also in terms of the sales versus new listings ratio. In the Burlington area, we're seeing a similar number of listings that we had last week. Sales that have taken place in the past 30 days is similar to last week as well. We're seeing about just over 4 months worth of inventory in Burlington, but we are seeing the sales versus new listing ratio climb now to 54.4% based on the last 30 days, and it's been climbing in recent weeks. We're seeing a lot of interest in semi-detached, detached homes, and all the categories are really starting to pick up. Median days on market sitting at 23, so it's down a couple of days. Average days on market 36. And we're seeing most successful negotiations coming in at a median negotiation about 3.5% off of the asking prices. In the Hamilton area, similar number of listings to what we saw last week. Sales for the past 30 days is down slightly. We've got about 5.5 months worth of supply in Hamilton, and we're seeing the sales versus new listings ratio still sitting around 40%. Median days on markets come down a few days to 25, an average of 38. In the Oakville area, we're seeing listings similar to where they were in terms of quantity about a week ago. Sales for the past 30 days, similar to what we saw about a week ago. Just under 5 months worth of supply. So that's starting to come down a bit. And we're seeing the sales versus new listings ratio increasing. It's around 39% now, just under 39%. So it's trending upward. Median days on market of 21, average days on market 35. And we're seeing actually a bit stronger negotiations happening in Oakville than we are in Burlington and Hamilton. In Oakville, we're seeing a median average of about 4.5% off the asking prices. That's all I have for you today. If you have any questions about this report, or anything regarding your particular properties, your neighborhoods, please reach out. Love to hear from my fans. Love to answer great questions. Talk to you soon.